Good morning, traders. This is Chris Buss with Traders Profit Compass with a pre-market look for Thursday, July 30th. Let's talk about yesterday before we get into the pre-market moves. We had a game plan over here that talked about buying a breakout from this key resistance level at 323. If you followed that game plan, you got a nice push up to 325 and a quarter where we closed. We also talked about being careful of overnight risk in this environment. We talked about the FOMC first move is usually fake. That has kind of played out overnight. As we stand here now at about 7:10 a.m. In the pre-market, we're down about 40 handles, putting price right back down here towards 321 where we closed, Tuesday night. So that has left a huge gap above as it stands now. We do have initial jobless claims and the GDP print at 8:30, so that has relevance and may move the market, one way or another. So this is probably going to be choppy here before the bell. We'll just have to play it by ear and see kind of where we open at 9:30. But here are the levels. If you key off at 321 and the game plan remains exactly the same as it was yesterday, we're right back at the same general location as we were the other day. So we reset at 321. Above 321, I think you can be bullish. Looking for a move back up to this 323 resistance level. If you break out above, again, we can go back and fill this overnight opening gap up to 325 and a quarter. If the jobless claims and all that turn out to be bearishly taken by the market, I think that a break below 321 points to a move down here to key support at 319. If we break below 319, I think you get a quick move to 318, and then that becomes a very critical level. Below 318 brings 314 into play. So a lot of moving parts here in the pre-market, but the good thing is the levels are very well defined. You have clear levels to shoot against, both on the upside and the downside. Stay fluid in your thinking. Don't get married to we're going this way or that way. And there may be end up being some good trading ops today with the added volatility. Keep in mind that we've got the big FANG earnings after the bell. My same general sentiment still holds. I want to be cautious there. I don't want to carry a lot of overnight risk into that. You can see last night, anybody that held, got wiped out here in the morning, at least as it stands now. If you've got nice gains at the end of the day, just take them off the table. Don't feel the need to go out on a limb with these earnings. Even if they print nice results, they could be sold. Or if they print bad results, they could be bought. So you never know how the market's going to react. And really the reaction is the only thing that we care about. So let's move on to the Qs. Same exact idea. We are here in the pre-market, down around 256. We broke above 259 yesterday, which was our pivot level. If you bought that, you got $1.50 or so. We've gapped down in the pre-market, back down to where we were. So the same notes apply. You can be long against this gap here at 256.45 and look for a move back up to 259. If you break above that, we can go up and fill this opening gap. But if we break below and fill this $1 gap down to this 255.50 level, we could come down here to test this 253 level and this 252 top of this gap. So keep those downside targets on the board, as well as these upside levels. I have no way to know which way it's going to break today. Just keep open-minded and let price lead the way. The one extra wild card here is, do the people that are long the FANG names get cold feet heading into the print and sell? Or do they hold tight with their positions and just kind of ride out earnings? If everybody in mass gets cold feet with this soft opening here, you might see a break lower if everybody decides to sell. So keep that in the back of your mind. Just watch price. We've got a real clear level here around 256.50. Breaks below, lean bearish, holds, you can stay bullish and look for a move higher. Moving on to IWM, same story. In our pre-market notes, we said yesterday, buy a break above 147.50, which was our key resistance level. Price did that. If you bought, it was good for $2. That's a great day, great trade. Hopefully you booked your profits at that level. If not, you're right back here where you started again, as price has come off and is now back near 147.50 in the pre-market. So we reset the day exactly like we did yesterday. Anything above 147.50, you can be bullish and look for a gap fill back up to yesterday's close. If we break below 147, we've got a gap here between 147 and 146 that needs to be filled. And if we break below that level, we'll go down here to test this 145. And don't forget about this $3 gap that lies below. So lots of holes in the chart, lots of room for price to move fast, either coming back up here for a fill of the overhead gap or a break below to fill yesterday's gap here, and a potential OIS to come down here and fill this $3 gap. So no changes in the game plan from yesterday. Follow the same levels. Moving on to FedEx. If you'll recall, a lot of people got long here against 155. Some people got here on the breakout at 165. In the pre-market, after UPS reported great earnings, we're seeing like a $7 pop up here towards a range between 175 and 178 in that range. I'm sure it'll fluctuate before the open. What I'm going to do is what I've done on some other stocks where we've had gap ups on the open. I'm going to book profits on the open. I'm going to take the position off, and then I'm going to set up a bracket trade around today's range. If price drives higher, I'm going to follow it higher. If price moves lower, I'd be inclined to play for a backfill of this gap. And then once that's done, it would be a place to try another long after the pullback. So thanks to UPS, we're going to get a nice pop given the volatility of the market and what might happen today or tonight after earnings. I want to be conservative. I want to put that win in the books. That's the way I'm going to play that. So you play it as you see fit. Another bracket trade I'd like you to set up is around OLLI between 110 here and around 100. I'd like to follow a breakout above 110 to all-time highs. Premier discount retailer should do pretty well in this economic environment. If the market stays constructive, I want to be long OLLI on the break of the range. If things fall apart, come back here to 100 against the 20. It might be a location to buy the dip, but if it breaks below, I want to be out of that trade, and possibly it might set up a short, but we'll cross that bridge when we get to it. Okay, that's all I have on the morning read. As I mentioned yesterday, stock charts was down most of the day, about 6 or 7 hours, didn't come back up until early afternoon trade. I don't have a ton set up. Other charts to share with you. But really, I want to be conservative here anyway. I don't want to step into any new positions ahead of today's trade and tonight's FANG earnings. So I'm going to kick back, be light, maybe do some intraday stuff on the ranges that we've discussed on the indexes. Otherwise, I'm going to be out of the indexes tonight and see how it shakes out for tomorrow. So, this has been Chris Buss with Traders Profit Compass. I really appreciate you spending some time with me this morning, getting ready for the market open. I encourage you to check out the show notes. There's a number of links there. You can join our team, get all my content at least 6 times a week. There's a lot more detail in the morning Daily Profit Compass on the blog that you might find interesting, with some information about gold and bonds and the dollar that I think are relevant, especially if you've been or continue to be long gold and gold miners and silver. I think there's some significant risks there. Anyhow, check it out. We'd love to have you. Again, this has been Chris Buss with Traders Profit Compass. Have a great day of trading. Thank you.